Okay, we are live. Hello there, everybody. Thank you for joining us. I am with Simon Higginbottom. Don't snigger at his last name. And he's from Absolutely Mortgages. And yeah, we've been dealing with Simon for a while now. We pass a lot of our business his way. He's very thorough. We find him to be informative in a way that people can understand, to be honest. I think that's half the battle of mortgages. I know that I've had a few first-time buyers through our doors who have just completely baffled, and including my brother, who has recently had the pleasure of working with Simon. I'm not sure if it was the other way around, Dan, but yeah. So I'll let Simon give you sort of a brief bio on him and what he's been up to, and we'll go from there.
Okay, hi everyone. Yeah, so Simon Higginbottom, Absolutely Mortgages. We're a whole of market broker based here in Epsom, in Surrey. Well, actually Ewell to be precise, but we cover the whole of it area. We're a family broker. It consists of myself, my wife, and my father-in-law. Business has been going for about 30 years. And we've got an enormous amount of experience. We've got a very wide range of clients. We're a whole of market, which means we can access virtually every single mortgage lender there is. We can do remortgages, purchases. We do a lot of buy-to-let. We've got quite a big buy-to-let side to the business as well. As I say, the key thing is we're a family business, so we like to treat the whole thing, our clients, we try to go the extra mile for them, and I think because we're a family, we're not afraid to talk to each other and help each other, so we always give you the best possible service that we can get. We're very hands-on, we're very informal, so we do get some sort of first-time buyers come along and think it's going to be an interview, but we quickly put them at their ease. And we try to always see the end goal, which is to provide you with, the mortgage that you want and the product that you want and the thing that suits you. We can't always suit everybody. Yeah. It might be the fact that you need to get a mortgage and your circumstances are quite limited, in which case we'll try the best for you. But usually we have a pretty high success rate, and we're well known throughout the area, and we enjoy what we do.
Yeah, I mean, that's the thing, what you said about actually going to an interview. I have to say, I think a lot of people are expecting not nasty questions, but it's that you're putting everything on the line, aren't you? And, yeah. You've got to admit every credit card and whatnot. Yeah. And I think the key thing that people don't realise is even if you have had an issue with credit previously, which, let's face it, do. Sure. There are lenders out there that with certain criteria will actually lend as well, and you work with those as well, don't you? You can make that happen a lot of the time. And I find that I go out a lot of the time on valuations. We're called out quite often to speak to people that feel that they need to sell because they've got themselves into a position where they can't stay there and they can't get another mortgage. And actually, it's those people that I hope are watching this that realise that actually there might be an opportunity for them to sort themselves out and stay where they are. This isn't about us trying to move people. This is seriously about solid advice, and not just COVID-19 advice. We've had this idea because we can't speak to you in person, but we're putting this out there because, yes, of course, I'm expecting us to get COVID questions because it's, it's the topic of the decade. I was going to say year, but it's going to be, of our lifetime. But, there are other things that people probably need to talk about. One of the biggies that we spoke about sort of late last year, actually, was fixing your mortgage rate. And I know that I can't remember the numbers. I'm hoping off the top of your head you can, but I think it was something like £400 or £500 a month that you can save just on a standard mortgage by fixing your mortgage rate properly. Is that right?
I've seen cases where people have saved higher than that. They've slipped onto the standard variable and they've not done anything about it, and they leave it. They don't open the letters from the banks. They don't take any notice. They don't take a call from us because we always call our clients to say, listen, your rate's coming up. Let's have a look at your situation and see if we can give you some more advice. Some of those people don't take the calls. Most people do. And obviously, you've paid the mortgage down. You might have made some overpayments. You could maybe move to a different loan to value product. You could save yourself quite a lot of money. I think there was one case end of last year where we saved someone about £600. So, I mean, that's by the by, but I mean, it could be, you might save yourself a little bit here and there, but yes, you should always refix yourself back in. A lot of people don't. It's quite a ridiculous number of people that don't.
Yeah, I think a lot of the time it's a change of circumstances as well. Like, 5 years, well, no, God, 8 years ago, I was working as an accountant, and I had a completely different setup. Actually had money then, and when we set up our own business, I'm an accountant. I should be comfortable with this. But when we set up our own business and it came time to renew our mortgage, I held off for a bit. I'll completely admit that, because I thought, what's going to happen if they look at my numbers now and realise that I'm not earning the big bucks I used to? And actually, when I spoke to my provider at the time, they basically just wanted to establish that I could still afford the style of living that I had. And, having a conversation a lot of the time with a mortgage advisor without having to take that step could probably allay a lot of the fears before they go on to that bit anyway.
Yeah.
I mean, we're here for questions, and I can see we've got 25 people watching us at the moment.
Oh,
so, yeah, I'm hoping that will build for you. But we're here and everything. Yeah, see if anyone catches you out. That'll be let's do that. Can anybody ask him a question he cannot answer?
Oh, here we go. There will be. Sorry, I was going to say that there's probably going to be a couple of questions that I might not be able to answer, but just email me. I'll get my email from Sasha or whatever, and then call me, and I'll be happy to look into something a little bit further for you. But
That's right.
it's not
I mean, especially with the way things are moving on the market at the moment, the way things are, I think that there's going to be things that come up that will need a little bit further investigation. What I am going to do is at the end of this Facebook Live is I'm actually going to pop a comment on the bottom of it to put your contact details. People can then come to you directly without having to go through the Sasha Scott gates to get your details, and hopefully you'll be able to help a few people out there. We're obviously amidst one of the biggest crises in history. It's a very emotional time and very sad time. We're hearing a lot of people passing. And on top of all that, the economic environment is on its knees, and will probably continue to be. Now, when we first went into lockdown 10 years ago, was it? I don't know. Maybe?
It seems like 10 years ago. Yeah, I've been stuck in this house.
I know. Yeah, I'm on Facebook Live to hide from a crazy toddler. I'm loving it. But when we first went into lockdown, the lenders quickly started to not panic but pull, didn't they? They had to pull out because they couldn't get into properties to value them. And I'm hearing that lenders are starting to come back a bit. What are you seeing out there in the market at the moment?
Yeah, definitely. So in the last couple of weeks, probably, in fact, I've just had an email. I've got my email open on a different application, and there's something that's just come through from a major lender just to say that we've put our maximum loan to value up to 80%. I could think of two others this week that have moved it up to 85%. So they've gone from sort of 60 up to 85. They're lending more money. Obviously, as you say, it's very uncertain times. We've got terrible issues going on and in society, and the economy is going to get thumped. But let's try to put a positive aspect to this. There is the situation in the market is very, very fluid. And lenders change very quickly. They can change their mind as much as they like. There's nothing to stop them from doing that. And as you quite rightly say, when this all kicked off, banks being banks, they react quicker than anything. It's like a rifle shot going off. They've changed everything. They've pulled rates. They've done whatever they want to do in order to cover themselves. The key reasons why they did it initially was because they basically, staff can't go into the banks, and all the mortgage lending people at the call centres can't work there because it's too dangerous. So they've had to send people home. You've got underwriters working from home. I can't hear you very well there. Sorry, Sasha.
I said, of course, sorry to interrupt, but I didn't think of that. The actual mortgage centres are going to be people in rows on top of each other. So of course they wouldn't. It's not, okay.
So and they've all got to go home, or they've had to be redeployed to deal with all the mortgage holiday requests that are going to come in, and that's going to be quite sizable. I mean, we're talking millions of people. Some of the big lenders are probably going to get millions of calls. So I can't. I'm impacted by COVID-19, so I can't pay I can't pay my mortgage and I need a holiday. So that obviously had to take up a lot of space. So they just couldn't deal with the volumes of work. So they've just reacted the way. So they've reduced a lot of the loan to value. Some went down to 60. A lot of your specialist lenders that you've mentioned, so the ones that help people with credit impairments, a lot of those just aren't lending. They're not actually banks. So they're specialist fund, they got specialist funders behind them, so they can't help you. But having said that, yeah, last couple of weeks, loan to values have started going up. I did a quick couple of exercises, so I just did a quick number of 90% loan to values. I could on my sourcing, and I could find 5 lenders that are currently doing 90%. And one of those is a big household name. There's another one which is a big household name, but it's a specialist type of product. So, but even there, if it's a 90% loan to value, they have to have a physical inspection of the property. So you can apply for the mortgage, but you're going to have to wait for that valuation to be done. And that's going to be when someone's safe enough to walk into the property and have a look at it. So, that's how short it is. And usually you would be looking at literally hundreds of lenders out there that would be doing it. So we've got 5 at 90% loan to value. Once we go down to 85, I'm looking up to the corner because I'm checking my notes. 85% loan to value. There's about 16 lenders doing business at the moment, and then 80% it starts to go up to like into your 30s and stuff like that. So most of your big household names will be operating around about the 70-80% mark. Okay, so it's improving.
Yeah, it's a better position than we had even a week ago, isn't it? And that's the thing. And one of the we've got obviously sales ongoing, and one of the things I'd like to sort of pick up on that is that actually having a mortgage valuation is something people are waiting for. So if you're in a position where you're obviously, anybody viewing properties with you at the moment is breaking the law. Let's be completely right about that. So if you're viewing property with an agent at the moment, you really shouldn't be. But anybody that viewed a month ago and was thinking about a property and has decided that they actually want to go for it but aren't putting their toe in the water necessarily, you can do that and the chain will hold for you. And that's key that I would like to say. So whoever you decided to make an offer with, whatever agent on whatever property, not a lot is happening with the newer cases. We're definitely finding that with the newer cases that we've just gone under offer on just before the lockdown, they're staying put, which is fair enough because the solicitors are completely mobbed. They're trying to get the people that are closer to the end so they can exchange and complete as soon as this is over. So it's understandable, but you can take those first steps, like put an application in with you, get all of the bumpy paperwork done behind the scenes, and then the chains that we're in and that we were joining early on, and they're more than happy and comfortable that it will have to wait for evaluation, whereas in the normal market, if you haven't got a valuation booked in 3 days, what's wrong with you? And now people are realising that actually that's the key thing. Some lenders are doing desktop, but it's quite a low percentage, isn't it? It's you've got to have a lot of equity for that.
What they've done is there's a couple of lenders that have re-evaluated the way that they will accept valuations. So what's happening is you've got automated ones. So, for example, there's a couple of big lenders out there that have automated systems. It's just a massive collection of data that they've got, and it all goes into a system, and you could get a valuation done within a few hours of the application being done, and it's done straight away. You've got what a lot of them have done is they've said that this situation has caused the housing market to keep it moving to some degree. Is what they're doing is they're doing it's almost like a physical valuation, except he's not going to the property. So the valuer is sitting there getting as much data as he can, looking at the area, looking at the local, or everything that he can, just to make sure that that house is valued correctly. Now, if he's happy with that, then they will allow it to go through. If he's got any concerns, then it's going to have to be a physical valuation. And if it's going to be a physical valuation, then I'm afraid you're just going to have to wait. And the golden question is, how long are we going to have to wait for?
Yeah, we'll know that. We'll hopefully know that in the next couple of weeks. And
hopefully,
yeah, we've got some questions. So should we? Because I'm sure we'll be jumping back into COVID at some point. But I'll just lighten the mood a little bit.
Yeah, go for it.
Thank you, Michael Bauer, for your question. Hello, both. How are lenders dealing with self-employed now? Are they questioning more current income or still using completed tax returns? That's a good one.
Yeah, it is good. Well, they'll use your tax. They'll go by your tax calculations, 2 years figures. I suppose really it's going to be a question of, well, if there's one lender that will take 1 year's figures. and usually it's 2 years figures. So if you're a sole trader, they'll want to see maybe a year's accounts or accountant certificate, your tax calculations. Some lenders will base it on 2 years tax calculations. They'll either take an average of the last 2 years, or they'll take the latest year. A couple of lenders will do the latest years. What they're going to be looking at, though, is if you say you were a self-employed builder, well, maybe you're not getting much work at the moment, so there might be some questions answered. Okay. The second thing is, you might be a plumber, for example. You're heating and ventilation. Maybe a heating specialist. Well, you're still going to get emergency call-outs. So, I mean, I had a client the other day. He's a plumber, and I said, "Are you getting any work?" And he said, "Well, I am actually, because I'm getting emergency call-outs."
Yeah, we're having.
So he's still getting business. So. One of the things that is happening is, and you'll understand as being an accountant, is that when if you're self-employed, they will ask for an accountant certificate. Most lenders will ask for an accountant certificate, or they will write to the accountant and they'll say, "Listen, what's the future business of this property like? In your professional opinion, as a chartered or certified accountant, you're going to tell me the truth, obviously. What's this company like going forward?" What I've heard that a number of people have said to me that accountants have been advised, probably by their professional bodies, is don't give any forecasts on a company's performance.
Yeah,
so I've had companies saying I'm not able to comment because he or she just doesn't know.
Well, you're next to the line, you kind of put a guarantee that you thought it was going to be okay. I know you can't the money, but that makes sense. I mean, what about I'd like to think 6 months' time, but let's fast forward a year. This income that some are able to get from the government, so the up to £2,500 to make up as long as they've given their accounts for last year, is that going to? You might not know this yet, so I might be asking something that's too far ahead. But is that going to be able to be used as part of their accounts? Because obviously it's going to be taxable. So all that income.
Yeah, probably. I'd have thought so. I'd have thought so.
People's mind.
Yeah. It depends. I suppose if I was an underwriter, and I always try to think like the underwriter of a lender, is how's he going to look at this? So if you come from if you're in a particular type of profession that would perhaps recover quite quickly, once this is over, then a little bit of research will tell you that things will pick up again pretty quickly for that person. If it's more drawn out, then that person's going to ask a few questions. Now, I'll give you an example. I mean, this is an employed person, but I had an inquiry the other day from someone who works for an airline. Well, it ain't going to happen at the moment because he's a pilot and he's not flying anywhere. So he's been put on furlough, and then But so they're going to say, well, you work in the travel industry. There's nothing going on in the travel industry. If you're a police officer or a nurse, if you've got the time to look for a mortgage at the moment, but you're going to be fine because your salary's not being impacted or affected. And so if you're in a public sector worker, for example, or you're a key worker in a private company that's going to get regular work, you're okay. But as soon as you start migrating from that into areas that have been massively impacted, then the underwriter's going to ask a lot of questions. So I did have someone from the travel industry. I've had a pilot. A lot of questions were being asked by the underwriter.
It's understandable, isn't it?
Yeah, and if you're self-employed, well, going forward, I assume that your business is going to get impacted by this, and there is going to be a slump, and they're going to be prepared to ask for that kind of those kind of questions.
Claire Duncan has actually said if this goes on for longer. Sorry, Claire, I didn't see that. If this goes on for longer and someone needs a mortgage in the next year or so, will the reduced income due to COVID be used or allowances made? So it's along those lines. I would like to think that lenders would be looking at this patch in time, so this quarter is like, and sort of say, okay, maybe we average out the rest of the year and see, because everyone's going to have to be a bit creative, aren't they? Let's face it. Otherwise, nothing's going to start again.
Okay. Well, that's true. And the other thing to think about is, as you say, it might just be a blip for a quarter or half a year.
Yeah.
And then the rest of the year it makes up. So a lender might ask, so one of the things they often ask is, so they want 2 years figures. Okay, self-employed. So going back to Michael's question, self-employed, they generally want to see 2 years trading figures. If those figures are going down, what they tend to do is they'll either average it out or they might lend on the lower rate. Okay. Now they might say, why did your figures decline in the year 2020? Well, I'd say we got a pretty, excuse my French, pretty bloody good reason. Well, there was a pandemic and we couldn't work.
Yeah.
But they will ask.
Yeah.
But you know so everyone's got a valid excuse. You can't say my business went down because I wasn't working and I went on holiday, or I just didn't bother doing anything, or I fell off my ladder, or whatever it is. You know, it's like it's going to be there's a very valid excuse. And in order to get the economy back on track, and bearing in mind the financial industry is a major part of the UK economy. Yeah. I suggest that I would like to think they will try to make allowances for as much as they can. But the fact of the matter is if you are impacted by this and you aren't earning money, you can't borrow. And just to give you an example, if you're an employed person, most lenders, not all of them, but I can think worst case scenarios, and I'm just checking my notes again, not accepting bonuses, commission or overtime, or even some employed allowances.
Okay.
So you can't use that as affordability because they're not going to take it.
Wow.
So if you're in a sales job, for example, you know, you've got a basic salary, say, of 25,000, and you've got bonuses of, you know, that double again. You're not going to be able to. They're not accepting it. And also, if you are furloughed, some lenders are taking your furloughed salary at this time if you apply.
Oh, but they are. Yeah, so they're still speaking to you if you're furloughed, but they're actually.
Yeah.
Okay,
yeah. So it's on the view that your job's going to be secure when you come back, and it might not be. I mean, but we you know, they're trying to exercise as much common sense as they possibly can and cover their backs at the same time. You know, they have to. They don't want to take risks lending money to people that can't afford to pay it back.
Yeah, and they have to do that, like you said a moment ago, to get the economy going and keep it running again. And there's talk of estate agency being one of the first back when everything starts to come back. Yeah. A lot to do with the fact that the general public and in general we do gauge the economy by how well or how badly the property market is coming. Yeah. Don't we? It's like even with the mortgage thing, we had people phoning up saying, "Oh, the lenders have stopped lending. That means we're going to have a property crash." No, it means they can't view the properties, and let's just sort of take this as it comes,
Yeah, exactly. Yeah.
Okay, so we've got Jazz. Hi, Jazz. Jazz is a first-time buyer and wants to go down the shared ownership route, looking to move in December. Do you think it's going to be easy enough to get a mortgage?
Well, in December, I don't see why not. A lot of lenders do shared ownership. It's fine. It depends on Jazz's circumstances, but ideally, what you do with the shared ownership, the key thing to bear in mind with shared ownership is that one of the things that lenders will take into consideration is the actual rent that you're going to be paying. Because remember, you're going to be part owner, part renter. Okay, so you're going to the key thing you want to look at is what the rent, how much rent you're going to have to pay, because that's going to be a fixed cost that you're going to have take on board every month. Right, so that's important. There's obviously ground rent. If it's a flat, there might be some service charges, so that all gets added on as well. I say that because we do get people who come to us about service, shared ownership, and they haven't taken those into consideration. And what happens is when we run the mortgage calculations, it's sometimes turns out not affordable. Okay, but that can be, it might be a question of how much of the property you're going to own. If it's a quarter of the property, 25%, then that's it's usually doable. I don't do a lot of shared ownership, but when I have done them, they've usually been fairly straightforward. And most of your major lenders will have products based on that.
Okay.
So yeah, but if it's around December time, I should
Hopefully.
Yeah.
things will start coming back to a new normal. Although actually some of this new normal stuff, I have to say, is better than the old normal. So let's try and keep some of those things. I've been managing to play with my kids every night. This hasn't happened before.
Yeah.
Okay, we've got Paolo, and he's thinking of moving and will definitely need to increase his mortgage, and his current mortgage is in his name. Can he port the existing mortgage and add his wife to it and increase it? I think that's what you mean, isn't it, Paolo? Want the new mortgage to be under me and my wife. Can I port it?
Yes, but we are looking when you port a mortgage, it is a new application, so you can in theory move your mortgage with you, but it is going to be a new application, and you will be adding a wife onto the mortgage as long as that fits with affordability. And you want to borrow more, it's perfectly possible.
And actually, adding another person with a salary is going to increase your affordability anyway, isn't it?
Yeah, I mean, if he's trying to avoid, and obviously I don't know his situation, but is it Paolo?
Yes.
Yeah. So if Paolo's trying to, he's fixed on a fixed rate with his current lender, and he doesn't want to incur early redemption charges, then it would be advisable to port the mortgage. And provided and obviously it depends on the lender who he's with, but provided if he's going to add his partner onto that mortgage, provided everything fits, it can be done. Sometimes what they might do is they might charge the early redemption charge and then they pay it back. Other lenders will, it's a lot more smoothly. Some lenders it can be a bit of a problem, but it depends on the lender. But if Paolo wants to find out a little bit more about it, he can contact me. And
it sounds like that's
so, but yeah, there's a bit more to it than that. It's usually fairly straightforward.
Okay.
And it's something we as a broker can do, because it's easier sometimes for us to do that than it is for you to go directly, because then sometimes it could be worth going to another lender. So I'm just saying that if it
in the rates you can get, and overall it could end up
possibly being we would look at all of those options. I mean, on paper, I'd say probably if he's porting it, it's probably because he's fixed in and doesn't want to incur several £1,000s worth of costs. But so as long as you're staying with that lender, because that lender, what that lender's thinking is, I don't want to lose this business, because you're fixed in with him, and I'm giving you a nice fixed rate. If you break it, I'm charging you a load of money for it. So, but if you're going to stay with me, that's fine. I might charge you the fee at completion, but then I'll give it back to you afterwards. So,
yeah, I suppose there's going to be a lot of taking of you at the moment as well, so that's probably going to be helpful for you, Paolo. I had another one from Callie, and Callie has said, what is the best advice that you could give to someone who is renting and can't save a deposit due to the rent being so high? Are there a lot of rent to buy properties, and is it a good way of getting on the property ladder? Or will there ever be a 100% loan? Our rent is close to double what we would pay for an average mortgage. Oh, this is the age-old annoyance, isn't it? People are out there paying all of this money for rent, and I understand the rental market needs to be there for a reason, and I'm a strong advocate using it, but when people are actually stuck in that situation, we did have 100% loans. They were starting to get a bit common, weren't they? But what's the situation?
I heard rumours that I mean, there are 100% mortgages out there, but let me just make this absolutely clear. You've got things like they're called Barclays have a thing called the Springboard mortgage. Okay, it's a 95% loan to value. And mum or dad, or in some cases, I think they'll even accept friends, will allow you to put in a deposit of 5% of the property value, which is held usually for about 3 years. You can earn interest on it. And then at the end of the 3 years, provided you've not missed any payments, you get the parents will get that money back.
Yeah.
Okay. So some people class these as 100% mortgages. Well, they are in a sense, but realistically they're not, because someone's still putting down a deposit for you.
Is that physical money? Because I can't remember whether it was Barclays or not, but there was a lender that was actually letting you guarantee. Am I right in thinking guarantee it as in against your own property as a parent? Or
no, they don't really do those anymore. I mean, there's a couple of things out there, but I mean, generally speaking, your guarantor mortgages Yeah, then we don't see as much of them. Yeah, there's things like, yeah. So you've got the Halifax have brought in a similar one to Barclays. It's just helping people get onto the property ladder, but you've got you're looking usually around about 95% loan to value. I mean, it's 100% on paper, but realistically, it's not, because some money is being held as a deposit. And obviously, if your son or daughter doesn't miss the payments, then that money's going to get held for a lot longer. But
yeah,
I think there were some more products. I won't mention names, but there were a couple of lenders saying that they had some products coming out which were 100%, and of course, it never materialised.
yeah.
But I don't know. I don't think we will see them in the way we used to see them ever again. But to answer the question about people who are renting and they can't deposit, there are a lot of lenders will accept gifted money from family. It is worth thinking about, but it has to be gifted. I know the lender wants a guarantee that money's not going to be a loan and it's going to be gifted and that they've got no interest. So it's what we might call the bank of mum and dad.
Yeah.
They will accept for extended relatives. They'll accept those. There are lenders who will accept gifted deposits from friends. If the money's coming from outside the European Union, there's going to be a lot of questions asked, and we've got to think of things like money laundering. So if I do obviously get clients from overseas that come to us looking for mortgages, money coming from anywhere outside the European or even inside the European Union, and I need to know that money is fully accounted for and I can see where it's coming from. So there's those kind of options. It might be worth looking at things like shared ownership, Help to Buy, where you're putting down things like a minimum of 5% deposit.
I think it would be also worthwhile for people watching that are in that position to run their numbers perhaps by you, and just because a lot of people think that they'll wait until they're ready, and they don't know actually that they might be ready 6 months before they think they're going to be if their numbers are written. And also to have a target. A lot of the time, if it's a case of saying, right, in 5 years' time, it sounds like a long way off, but let's face it, it's not. If you do this each month and plan this way, you're going to have enough to buy something to get on the stepping ladder with. And there are rent to buy schemes. They do tend to be apartments more than anything, though, I've noticed. There are rent to buy schemes out there, and as I say, it could be that that's a stopgap. I know if you're renting a big house, it's great, but actually it could be that coming back from that and going into something smaller and just seeing what you can do there, that might be another option for people like Callie who want that advice. Thanks, Mark, for your feedback. I had another one here. Jazz has come back just saying, thanks, that's very useful to know. When would you recommend starting the buyer's process to move in December, if I'm allowed a second question? Of course, you're allowed a second question. If you've identified your property and you're already having conversations, then I would start talking to them. That would be my advice. I don't know about you, but I would start talking to them and seeing, because if it's a case of that you're going to have money by December, a lot of the time you're dealing with trusts or housing associations or local authorities and all of that with these things, and it actually can be a much longer process than you think. If Simon and I were doing a purchase of a flat with you, that could take anything between 10 and 16 weeks just holder packs. And you think, with what's going on now, we could be looking at 20 weeks. That's 5 months. Where are we now? April. That's taking us straight to September, October anyway. So you're not actually that far off, Jazz, to start having to think about where you want to locate to, and
exactly.
And with the money,
just see how the ground lies. See how the ground lies now. Make sure there's no nasty little surprises.
Exactly.
And then you can
putting something out now. Yeah, that's true. And obviously seeing the numbers as well, seeing if your numbers work, Jazz, you would probably need to speak to somebody like Simon to make sure the numbers work before you start thinking, because it might be that you can do it before December, or it might be that actually you need another tax year because of current climate, and you might need to do it in May next year. There's that to think about as well.
I've got, it's funny, I had someone called me yesterday, first time buyers just looking to buy a property, and they're looking to move in February or March of next year. That's their plan. And they've already started asking the questions, and it's quite sensible, because we found a problem And I said that currently you're not going to be able to borrow as much as you want to. And I've put COVID-19 to one side. So basic standard lenders issues, there was an issue there. So it's given them, and they went, thanks for telling us now, because they can do something about it. They've got plenty of time, but they want to move in February, March of next year. So, you know.
But that's brilliant. They're being very sensible, because, you know, I go out to people and value their homes that they don't want to move until next year because they're going to need a school place next year. Those people are thinking ahead. That, you know, they're looking at what they can and can't afford. They're looking at the areas they want to do. It's a big. You're making a big step. I think that if you don't start thinking and doing at least 6 months before you're actually going to be doing it, you're behind the game. Especially in a moving market like this. I think that, you know, the more planning you can do, the better, right?
I can think of nothing more frustrating for an estate agent, and I'm thinking from an estate agent's point, if that's possible. But you've got a sale, it's come through, and then they turn up and say, I need to get a mortgage, and I need to move really quickly, and you're on the phone to me going, well, they need to move quickly, and then we find a massive problem.
And it happens. Okay. They have no idea a lot of the time. They've gone online and
never saw it.
Calculators, but they've gone online and gone, oh, I've got an agreement in principle, I can earn £1 million, and they go and put an offer in for £1 million, and their affordability is 600. You know, this happens, and it's because they've taken advice from an online calculator that hasn't taken other circumstances into account. That's the key thing. It's always better to speak to a spend.
You can spend an hour with me. I don't mind. I see people like thinking 18 months ahead. I can sit down with you, spend an hour and a half, and just tell you where you need to be, what you need to do, and all I can say, you're good to go, and then at least you're clear in your mind that there's no problems, and I can explain all the potential pitfalls and what you need to look out for, and then you're ready. You just know that you've got that, and then, you know, when you're nearer the time, we get you an agreement in principle, so you can go to an estate agent and say to that estate agent, look, I'm good for the money, I know I can get this loan. It's not guaranteed at that stage, there's still a full application, but at least that estate agent can look at you and go, okay, you know, they've got this potential agreement, I'm confident that, you know, I've got a better chance of getting this sale through.
Yeah.
Which is, you know, you always do that.
And when there's competition for a property, that's the key thing. Yeah. That I would definitely like to put out there for people that are buying, you know, before you even pitch up for a viewing, have a conversation with a Simon. You know, make sure that you know what you can and can't offer, and make sure that they can figure for you quickly, because we've lost some sales to some lovely, you know, couples and individuals who we would love to have sold to, but our duty as an estate agent is to sell to the person that can move and move, a lot of the time move in line with the chain that they're joining as quickly as they can. And if we're faced with 2 buyers and one of them pitches up with an agreement in principle and is ready to rock and roll, and the other one even sometimes offering more as well, you need to remember that, but they're not ready yet and their mortgage advisor is on holiday, you know, they've lost that property. So it's preparation is key, definitely. And I think also, even if they're speaking to you a year, 18 months in advance, your relationship with them is there then, and they can call you about the circumstances. They can call you when things are happening that look like it's going to be good for them to maybe move a little bit quicker, and you've already got all of their information to hand to a certain extent and can help them make quicker decisions that way. Paolo has come back and said, probably a silly question, there's no such thing, you're fine, but I still have a balance on my current mortgage. Does that balance come with me to a new or ported mortgage, or is it paid when the house is sold? Hope that makes sense. Paolo, would you mind letting us know, if you get a minute before I release Simon on you, could you let us know if you think you would have a redemption figure on that? And we'll come back to that question. Yeah,
very good enough.
Because actually, if you've got a redemption figure, it means you're tied in, and there would probably need to be a conversation with that lender. But if you're
I would say, and I'm bound to say this, but I would say that, you know, Paolo gives me a call, because it depends on lenders and everything else like that. So each lender treats it differently, and it's not a golden. There's not a fixed rule. So we just need to look at it. And then we could say, but anyway, if he comes back, let us know about the redemption.
Come back and said, I think there is a redemption, so it probably will be a case of having to have a conversation, Paolo, with Simon, just to see what the numbers look like, because as you said earlier, if that redemption is reasonably small, if it's, you know, a couple of houses, actually you might be better off paying it and switching to a mortgage that saves you that over your fixed term with them anyway.
Possibly, yeah. Possibly.
So, I'll make sure, Paolo, that I put Simon's full contact details at the end of this live feed so you can get to him. Oh, and Jazz has got her eye on a house. Oh, brilliant. Oh, well, there you go. Well, pick up Simon's details as well. Have a chat with him and see what you can
get in touch. Yeah, that's fine. No obligations. No obligations. It's fine if she wants. You know, she just wants to ask some questions, and fine. That's all right. I don't mind.
Brilliant. And I suppose the big question at the moment is: have you heard of any lenders that aren't being very easy with the mortgage holidays that people are applying for?
I haven't. No. I think they've all, because basically it's a commitment they've made. So they're all. I think there was a couple which have had a few problems. You mentioned product switching earlier on. You can product switch whilst you're on a mortgage holiday. That's quite important. A few people have asked this. It's not a problem. So if your rate's due in the next few months and you're on a mortgage holiday, don't worry. You can still switch your rate to get a new rate. That rate will take effect when it's due. So if your rate's due during a mortgage holiday over the next 3 months, you can switch that rate, and when you come off the mortgage holiday, your new rate will apply. But you need to bear one thing in mind, that you would have, during that mortgage holiday, you've got to pay back those 3 months. You've deferred payments for 3 months, and you've accrued interest. So the illustration you get won't be 100% accurate, because there will be the interest that you've accrued and the deferred rate spread over the term of the loan added on to that mortgage. So we just need to make that clear to you. Okay, but you need to fix in. You can fix in. I haven't had. There were a couple of lenders that had a few technical problems, but otherwise, I understand it's all pretty straightforward. I haven't done one yet, I must admit.
So literally, if your fixed period was coming at the end of April, and you wanted to see, obviously, especially even more so now, you want to see if you can save money by switching lender. Phone you, and it doesn't matter that you've taken that 3-month holiday. They can just pay the normal way. You're
not switching lender. You're switching the product with your current lender.
Right,
okay. No, I need to make that absolutely clear. Definitely. So you just product switch it. Your fixed rate's coming to an end with, say, Santander, and you're on a 2-year fixed, and it's coming to an end now. You've taken a payment holiday. Don't worry, you can change your rate.
Brilliant.
You fix back in again, as long as you're not changing the term of the loan and the amount you're borrowing. So you're just going to a different rate. That's not a problem at all.
And I was reading or watching something the other day, and this 3-month COVID mortgage holiday, it doesn't come off of you're normally allowed something like 6 months over your term off, aren't you? Like for, I don't know, I when I had Saxon, for instance, I took a month payment holiday, so I had a month without that mortgage. And if you've done that and I had done that, I would have 5 months left on my mortgage that I'm still allowed to, for a good reason, have a payment holiday.
Okay, right.
The COVID bit isn't actually affecting that. So
I understand that's not the case. Yeah. Remember, you're self-certifying that you've been impacted by COVID-19. They're not going to ask you any questions. That's all you got to tell them, and they'll go, "We can give you 3 months." If you're in mortgage arrears, or you've had problems with the mortgage, then you won't be allowed to have this. But there will be alternative options available for you from your specific lender.
It's about asking, isn't it? It's about asking, and that's the thing. Even
you got to ask.
I mean, I'm getting random emails and messages from my bank. I had one in from my credit card the other day, and it was very much along the lines of, call us if you've got any issues and you need to do something about this. They're all reducing their overdraft interest. They're all reducing their ongoing interest. They're all trying to make it as comfortable as it possibly can be for people to get through this. If you're not getting that kind of dialogue from your lender, whatever way it is, whether it's a mortgage, a credit card, or even an overdraft, pick the phone up and speak to them, because there is help out there, and I think a lot of people are suffering needlessly because of it.
And you can do it online as well, so you can go online and request it if you need to. I think to be generally the banks have surprisingly been incredibly reasonable. I just wonder what's going to, next year rates go flying through the roof. But anyway, so at the moment they're playing ball and they're being really good about it, I think. So I haven't heard any, I've not had any problems. I've not heard say such and such a bank are being absolutely cruel and nasty. So, they are all duty bound to honour this. It's an agreement between the industry and the Chancellor of the Exchequer.
Brilliant. And obviously under current circumstances, everybody is working from home. When I put your contact details in, I'm going to pop your office number on. Is that still able to contact you? Is that going to be all right?
The office number's diverted to mine, but you can give me my mobile phone number. I don't mind. We're working from home. If I need to do an application, probably most brokers are doing the same thing. I need to certify your ID. If you need to move, so we can use things like Zoom, Skype. Because I usually need 2 forms of identification to prove who you are, so that's acceptable, because obviously it could be a face-to-face thing. So it's not a problem. We can still do it. I mean, I think the key thing I've got to make quite clear to people is that I'm a whole of market broker and I've got access to the whole market, but I can't give you a whole market overview at the moment because lenders aren't lending what they usually lend. So, if you said to me, I desperately need to get a mortgage, then fine. I've got to make it absolutely clear to you that there's a whole tranche of lenders out there that aren't going to be able to lend to you because they're not lending at those loan to value rates. They're only those products. They're not doing this, or that they're not. Their criteria has changed. So, I'd sort of advise people to sit tight where you can, but if you've got to move, then I can help you. But the market's just, it's very it's compacted. It's not what it usually is.
Yeah, I mean, that's understandable. Even in the last week, we're seeing things get better from a lending perspective. So that will only keep happening as we move towards some kind of opening up of the world again. I think that those people that genuinely need to do it, I would say though for sure to definitely give you a call if they're on a variable rate. I think that is key with the interest rate so low as well. It's key for people to have that conversation, because I heard of somebody late last year on a rate of 4.5%. And they've been paying that for a while, and it wasn't one of our clients, but it was like, well, you can definitely fix that in and halve that at the very least. Well, I think I mean, is there anything else that you think that we should be doing at the moment? Obviously, under the current climate, obviously trying to keep on top of our bills, that's a key thing, or making arrangements.
Listen, I think the key thing is you can take a 3-month mortgage holiday. I have had some people say that they're worried about when that holiday's finished. I've had self-employed people asking this question. I've had employed people asking the same question. And they say, look, what if I still can't afford to pay the mortgage after that date? Well, my advice to you is get onto the lender as soon as you possibly can. Don't put it off. As soon as you put it off, the problem's going to exacerbate. The lenders have to be reasonable, and they have to behave in a reasonable manner. So if you think it's going to go on and drag on, deal with it before it happens, rather than, and don't react to it. Deal with it beforehand. Your broker can't help you. You need to go directly to you. If you want some advice, that's my advice. Call your lender, explain the situation, and they'll try their best to help you. I mean, we don't know what's around the corner, so it might be that they do extend it.
Yeah. Also, as I said just a moment ago, a lot of us have got payment holiday options in our mortgage already that the lenders might say, okay, the government haven't extended this option, but we're willing to let you use another month, for instance, and everyone's back on their feet again.
Yeah, definitely.
Okay, I agree, Paolo. He's been very, very useful, hasn't he? Paolo or Paulo? I'm sorry if I'm saying it wrong. I've just realised there's a U, so Paulo. No, it's been really useful. I think everybody's asked some really good questions, and obviously the main event is definitely COVID at the moment, but I think that, you know, having these conversations and getting people to give you a call where they're worried or even excited. Let's face it, there's people watching this that, you know that they're going to be ready to move as soon as they're allowed to, and they want to get that ball rolling and to give you a call. So I'll pop your contact details, including your mobile, into the feed now.
Thank you. Yeah.
If for whatever reason you can't see this, just message us on the Sasha Scott page, and we can just get those details over to you again. And yeah, thanks for watching. And if you have any questions, I know I'm conscious that this video will be sitting on the page and people might come on afterwards and realise that they need to ask more questions and they can't just pop them either into the feed or into Messenger. You can private message us and we can pass them on to Simon for you and get you contacted. So please do feel free to ask away. Thank you very much for joining us, Simon.
Thank you. And, thank you very much. I've enjoyed it. Thank you. I'll speak to you tomorrow.
Yeah, it's nice to be having a conversation. So back to lockdown for us. Thanks everybody for watching. I'm so glad you're excited, Jazz. That's brilliant.
Brilliant stuff.
Take care, everyone.
Thank you. See you soon. Cheers, Sasha.
See you tomorrow.
Yeah. Take care, love. Bye. Bye.